Good morning from Chicago, fellow traders. It is 8:01 a.m. Chicago time on Tuesday, the 31st of August, 2021. This is episode number 2063. Remember when we did TB 2000, Trader Bite episode number 2000? That was just a couple months ago. Thanks for showing up every day. Thanks for being here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the overall picture, we see that the overnight risk posture is mild risk off. We're seeing negative, very small negative numbers across the board in the indices this morning, with the NASDAQ down 16 and a quarter points. Again, the Russell leading as it leads up, it leads down 15 basis points. Euro stocks and the DAX are leading the indices that I follow down on the day. Crude oil's off this morning. Crude, which enjoyed a rally here on the back of Hurricane Ida and the shut-ins, is now coming off. Remember, crude came up from around $62 up into almost 70, and is coming off. That's the weakest product on the screen today. There's a little bit of outflows out of the 10-year notes and a 30-year bond. 30-year bond's only down 2 ticks. The euro bond, however, is down 59 euro cents. Bitcoin and Ether still in a hovering pattern, although Ether has picked up a little bit. Ether's been hanging out around 3,200 this morning, almost at 3,500 per coin. Bitcoin is in a holding pattern at 48,000. That's where that stands. That's the overall picture. Key earnings, pre-market netties, expecting PVH aftermarket. They're about $3 billion revenue clothing retailer. Key things that I'm seeing across the board, and across the board means Bloomberg, Wall Street Journal, Reuters, AP, and so on, just a scan. Not seeing anything significant other than the fact that there's just a continued spike in COVID Delta cases. We're also looking for U.S. consumer confidence today from the conference board. And then on the calendar, we had Case-Shiller this morning looking for Chicago PMI. I want to remind you that the Chicago PMI is a private number, and it comes out to members at 9:42 Eastern. 9:42 Eastern to the public at 9:45. So the move starts at 9:42. If you're in a position and don't have cover, it's, in my opinion, best to step aside before 9:42 and not to wait till 9:45. By then, the move will have probably already happened if the number's off. Again, the conference board consumer confidence at 10 a.m. API crude oil stock change at 4:30, right after the close. Half hour after the close, we get a couple numbers out of Australia, manufacturing numbers at 6:30 and 7 Eastern. And then we wrap up the day with the 9:45 p.m. China Caixin manufacturing PMI. And that's what's on deck for today. So it seems like a full calendar, but and there are some key pieces there, but the overall key figure for this week is the unemployment non-farm payroll numbers out of the U.S. coming this Friday. Looking at the S&P, 221,000 contracts traded in the overnight session. Multi-distribution profile in the S&P, we'll go over that in a little bit. Inventory is somewhat balanced. It shows long 27%. Against settlement, the range is relatively wide. The range is above the mode, or the expected value, of 23 points in the overnight session. It's at 26 and a quarter. That range of 23 points changes over time. This is looking back 252 days. That is the mode, or the most common value. The range is normal in the S&P up to 37 points in the overnight session. Okay, and in the day, normal is up to 48 points in the S&P still, because it includes a lot of the action from last year. Point of control this morning, 45.2675. 45.2675. Remember, the point of control stat, historical stat, is that we're likely to touch that point of control, historically speaking, 82% of days we open, and we're likely to, there's a historical probability that we would touch that point of control at 45.2675. Let's jump into yesterday. So yesterday, although the primary expectation is a push higher off the open, I did expect the exhaustion in the 20 area. When we did not get it, I just let the day go, basically. Was looking for it to push up to the 1920 areas outlined here, and then I was looking for it to fall back in and come back towards the prior day's point of control at 45.06. That's what I was looking for yesterday. And then other than that, if it fails to continue higher, I expected it to fall back through in scenario 2 and push down into 97 as the next key figure to test. And the reason for that is the run. It's a Monday, which is now becoming a relatively active day. Mondays are traditionally pretty quiet, but we had a pretty decent run on Friday. We breached the 4,500, and the expectation is it likely will stall out. It would stall out and come back in to retest those prior highs, and it did not do so yesterday. Continued to 45.3450. So none of these worked yesterday. It was correct in that we expect to push up early, but it did not quite make the turn. So what do we have for today? We have since this is what's actual, we have a clear opening swing here. For the opening swing, you just need to be patient enough for long enough to see it come across the open. It's an open auction out of range. We ended up leaving a 2-tick gap between the prior day's high and yesterday's low. Yesterday's low is at 45.1050. Friday's high is at 45.10. So there's a 2-tick gap there. I did not mark it a 2-tick gap. Does not signify an auction space. The main area where a breakout trade could have been taken is right there, a breakout of this zipper. I was not a part of it. This is just not my kind of day. Yesterday, a trend push into new all-time highs, not my cup of tea. So stood aside yesterday, no trades. And then once it got to 34.50, it stalled out and began to rotate. You could see here, it rotated right back towards the IB high, where it actually closed at 45.25, or settled at 45.25. So once this move here was missed, there was nothing to be done, and that move was done by the second hour, by about 10:30, when the European markets closed. It was done, and then from there it was sideways. What we did leave us with yesterday is a double TPO high, or a double top, which is a weak high, and you can see it in the profile here that there's a very strong taper, no excess, with a point of control near highs. We had some pretty good selling into the close. We sold into 45.25, which had some size. A lot of trading occurred on that close. I mean, it was pretty intense. Look at the amount of trading that had occurred. We almost shifted the point of control down to 45.25. If you watched it on the close, because I was looking to see if I can get an end of day trade off of this. I saw this as an impulse flag, and I was looking for a continuation higher into the close. it had all the pieces. It had the impulse. It had the consolidation of wide zipper range. It held the IB high. It had the point of control near highs, and it had a double TPO high. Those are all pieces of a setup to get long. Look for an area to lean against with a reasonable risk. Take the long. I'll take that trade all day, every day. And on the close, it just started to sell. So it was pretty aggressive. You could tell, you could see the delta down here. The delta selling on the close there was relatively significant. We went from about negative 5,000 on the delta to negative 22,000, 24,000 at the trough at the bottom. In the delta, there was really some really significant selling on the close, and a lot of it traded out, as I said, on the 25. So 25 is an important line for today. You could see the overnight session traded around that 25 a lot. In fact, we tested it first thing after the open right here, and then we rallied off of it, came back, traded a whole bunch again there in the overnight session, in the Globex session for today, putting a point of control at 26.75 or so. That 25 area is the line in the sand for this morning. You want to watch how that trades, and you want to gauge your bias based on the 25 area, in my opinion. So that's where that stands. So overall, we had a P-shaped profile. This was a squeeze higher into new all-time high territory with a double TPO high, 740,000 contracts traded, pretty light volume, and then we sold on the close, and then now we're selling into the open. So we are starting to take back. Remember, I talked yesterday about us taking back some of this, some of the range. Some of the range here, and let's expand this out a little bit. Taking back some of the range down here into the 4,400, and what we've got is almost exactly the same kind of day, right? After the big rally on Friday, the expectation is a resting day to set up for the next move, and instead it had another rally yesterday. It is a little bit extended. Two P-shaped profiles or rally days in a row into new all-time highs is an extremely low historical probability, yet here we are. And then coming into today, we have this kind of setup where the market has left the VWAP, full session VWAP in mid, and the overnight point of control above. And again, the line in the sand for this morning is 25. That's where we need to focus our attention. The delta in the overnight session is flat. A lot of the selling came in the late morning. In the late morning, this came along with the ECB inflation numbers. And that's where we're left. So just keep in mind the 25 this morning, okay? And what does that bring us to? That brings us to this terrible consolidation that we had yesterday. This awful zone here at 45.10 down to about 45.04 brings us into this area. This was done in the overnight session, but we have the 45.10 as the high of last Friday. If it falls below, then we are back. Then the 4,500 is back on deck, and then we start to look at 44.85 and 44.87, actually, and so on and so forth. So, very important to keep an eye on what's going on right at the open this morning. Okay, so just bear that in mind. Keep your eyes peeled on the open. Not a good day to miss the open. Here's the overall picture. We pushed highs and we put in this high flying point of control here at 45.31 to start the week out with a double TPO 34.50. and it looks like we're trying to slide back. So keep an eye on yesterday's low. Yesterday's low being taken out could, not necessarily does, but could end the one-time framing up, and we're looking for support around the 45.10 area. If 45.10 gets taken, then we're looking for it to climb down into this area below at 44.82. That was the base last week of the run. So that's where we stand. Looking at the overall picture of how things are setting up, the order flow is not giving us very much to work with. Again, this market maker, which has been active since the beginning of the summer, sometime in the spring, we haven't really seen this very much in the S&P. This obvious market maker that's putting bids and offers at every other price. They're here, every other price, and they're kind of coloring the book. You see those orders kind of move around. This kind of creates some noise. If I scroll down and up, I don't see much until 4,500 and above. I'm not expecting to see anything until that 34.50, but it looks like 38's well offered with a large block there, but the overall size is not really there. It looks like 250 out of 317 is a single block in that order book. The way I know that is because single block trades using the MBO data show up in purple. That's a single block. That's one order. And then you can guesstimate what the percentage is of that bid or offer at that particular price. Okay, so the order flow has been very, very muddy, I have to say. In the S&P lately, it's not as clean to look at. Here's the action overnight. Not seeing a lot of size coming through. Like we generally see bubbles like this occur at some point in a session, and we're not seeing any big trades. Pretty light, relatively consistent or broad trading across the entire range. You can see the profile here is pretty jagged. A lot of price discovery, and again, we want to monitor this area here, right? So we have a nice zipper that has formed in the 28 to 23 area, and the question is, does it come and make it to the other side? Does it get through to the other side? If it does, then I'm going to lean long using the 28 to 25 area as support. If we try to push in here and fall off, then this is an obviously defined risk area to lean against. Again, between 25 and 28, looking for a continuation lower, and then the target then becomes 45.10, 4,500, and then all the way down to the 87, right? The 82 is the next point of control below. So that's where that stands. Let's take a look at what's expected for today. Just setting up the chart here for that. What are we looking for today? First, I'd like to ask you to hit the like button. Please hit the like button before you take off. If you have not subscribed to the YouTube channel, please do so. If you don't see the like button because you're on the Edge Clear page, just go to the bottom right of the video and click on YouTube. That'll bring you into YouTube. You can log in and hit the like and subscribe button. I'd appreciate it. Okay, so what do we have for today? I've shrunk this too far. Let's transition a little bit higher. So there's some great structure here. There's some really good structure here beneath us. Look at how clear the structure below is at these stock zones. Two shoulders there. We have a peak on a run from the 22nd. We have fought this level quite a bit. You could see lows. You can see the high here mid-session, a low volume node. You can see us fighting this high again in the 85 area, 82, 85 area. We have an MC point of control at 82. There's just a lot of structure underneath. Like these stock zone levels are very clear. Are very clear to me in terms of areas to pay attention to. So here's what I'm looking for today. I'm looking for it to battle this 45 area, and I'm looking for it to attack the 4506, 4516. The test of 4510 is likely to see a bounce consolidation and then a push into the 4502 before this bounces back up. Not expecting it to be a rundown day. I'm looking for it to be a lower high, but I'm looking for it to be a resting day. This high here, this tweezer top type formation was done early on low volume, but it's a pretty decent structure to lean short, especially since we're under the 25 area, the line in the sand. The secondary is we open, pull back, consolidate, push through the 25, use the 25 as support, and then squeeze through the weak high at 34.50. So 34.50 is an important test area because this is a double top, and if we get above the 25, then we want to get long, lean against the 25 for support and the 25 to 23 area for risk control. And then we're aiming for 34.50. We're risking about 2.5 points for 10 points of return. That's the R factor we're after in this situation. Looking for it to poke through the 34.50 and then consolidate near the overnight high. I expect that overnight high to be taken here for the overnight stat, but if we push higher, the 34.50 becomes very, very vulnerable. Okay, so we have pretty good range in the overnight session. We've got multi-distribution profile. Did I say 34.50? Yeah, 34.50. 45, 34.50. 45, 34 and a half, technically. We have a multi-distribution profile, so there's active price discovery. We have pretty good range, wide range this morning, and we have good volume. So this is a good morning to pay attention and see. And again, just observe carefully how we treat this 25 area. We might get stuck in between 25, 28 and an open auction on the open at first, but I expect the market to make a move away from here at some point. Okay? Good luck, and I'll catch you tomorrow. Take care.